Last day of Web Summit. Hope you're all still going strong. I'm Sam, the tech correspondent of CNBC in Europe. This morning, I've got a great panel. We're going to be talking about what's in evaluation, why there are so many fintech unicorns, and so on. But I think to begin with, why don't you guys all just give me 20 seconds on yourselves?
Ladies first?
Ladies first.
All right, my name is Edith Yeung. I'm the general partner at Raise Capital. We focus on seed, early stage, venture investment, all things enterprise, fintech infrastructure, and also crypto.
Cool. Hey guys, I'm Pascal Gauthier. I'm CEO at Ledger. 2 questions. Raise your hand if you have crypto. Okay, keep your hand up if you have a Ledger. Oh, come on.
What? No way.
Okay, we did the same trick yesterday on main stage, and more people had their hands up for a Ledger. So it's ledger.com, go buy a device. Anyway, so that's what we sell, hardware wallets. We're in security. If you own your crypto, you want the best security. The best security is through hardware security and with a hardware wallet. Well, that's what we do. Thank you.
Thanks. I'm less interactive, so I'm not going to ask you to raise your hands. But I'm Arik. I'm the CEO and co-founder of Rapid. Rapid is a platform that enables companies to build financial applications. So basically, we're a fintech as a service solution that allows people to build anything they want in order to serve financial applications, from neobanks all the way to a checkout page in an e-commerce website. We do it in 105 countries.
That was great. Thank you very much, guys. So I don't know if you know, but a record number of startups joined the fintech herd this year. In the first half of this year, European fintechs raised 10.4 billion euros, and that trumps the 9.3 billion raised across the whole of 2019. It's fair to say that this is a fast-growing industry. But what are the future industry trends, and does a unicorn valuation truly lead to a useful, long-lasting product? So let's get into this a little bit more. There are now around 120 fintech unicorns globally, and 30 of those are in Europe. Edith, why do you think there are so many fintech unicorns?
Why? Well, I think fintech is the most exciting area to be, really. But the most important part is, if you actually look at, just to start with, like looking at companies like PayPal or Visa, both of these companies are doing about 22 billion in terms of revenue. And I did my homework. PayPal now is worth about 270 billion, which is 20-some X of revenue multiple. I was also looking at Stripe this morning, and they actually have about 7.4 billion in revenue. So, which makes it like this 95 billion in terms of valuation sort of makes sense. So in the public market, if you're actually seeing public companies are getting that sort of multiple with that sort of valuation, which trickled down into on the private market, that's why there's so many VCs want to jump into this game, because they can understand that the revenue actually do justify the valuation. But honestly, I don't actually care about unicorn anymore. It's really about Dekacoin, right?
Yeah.
As we were talking in backstage, I was literally manually counting the number of Dekacoin. It's a total of 14. And the most interesting part is that 50% of them is outside of the US, which makes it super exciting.
And we actually have a Dekacoin on stage with us today, don't we, Arik?
Yes.
Tell us your valuation these days.
These days, based on 5 minutes ago, it's 15 billion.
And what I'm interested to know is how life changes for you as a company when you go from 1 billion to 15 billion.
So I agree with the comment that the unicorn thing is not a thing anymore, because there are so many companies that reach the $1 billion valuation. But the jump from being a $1 billion company to 5, 7, 10 plus, it is a massive leap that the company needs, because it's not anymore about the potential and the market and the multipliers. It's actually about running a business that scales very fast and grows. And I think that what we stumble into is the challenges when you scale a company to this size. You need to justify valuations, and unless you grow 3x a year and super aggressive with high margins, you will never be able to reach the Dekacoin,
Who's helping to create all of these unicorns, Dekacoins? Are there any particular investors that have propped up in the last few years?
So I think that there are like a lot of funds that have a lot of money, so the amount of money that is coming into investment into startups on planet Earth is huge. I think that the game changer that changed the valuation game was the fact that the crossover fund, Tiger, Co2, Altimeter, and all these funds that do basically public and private market investment started to invest in startups in earlier stages, and they cannot write a $5 billion check when they manage $40 billion in assets. So they have to write a $200 million check, a $400 million check in order to move the needle. And then it started to move the valuations up, but also forced the entrepreneurs to actually think differently, think long term, not 2 years down the road, 3 years down the road, actually 10 years down the road, and this is when the exciting things become.
Pascal, do you want to talk us through where you guys are at in terms of your valuation and how you see this changing in the near future?
Sure. Maybe I just want to comment on something to add to what my colleagues here have said, but there's also a macro trend in terms of money that we shouldn't ignore. I think in the US it's $1.9 trillion that just been printed. In Europe it's similar, so you have such an afflux of cash in the market, and you combine that, and that's largely because of or in combination with COVID. And so it means that every investor in the world right now is trying to invest in tech with a lot of money. And so that's a macro trend you cannot ignore, and that's pushing many things. That's pushing sort of investment in tech and valuation, that's pushing investment in crypto. Because, you know, where do you put your money? Like negative yield at the bank, so where do you put your money? Like you have to put your money in somewhere it can bring a positive yield, and the yield that you're asking for your money, like if it's a positive yield already, it's pretty good compared to negative. So maybe you're not as you don't really look at the return in the same way that you used to in the past. And so this macro trend is huge. And I think for me, what it means as an entrepreneur, so we are only a $1.5 billion business, so we're not a Dekacoin yet. And
not yet. Won't be long.
Yeah, well, you know, the game for us is 100 billion. That's what we're looking at. Yeah, 100 billion.
That's huge.
Yeah, but we think we can make it for different reasons. One, we take care of a very important problem that only going to get greater in the future, and we're a very, very unique company with very unique skills in the space, and this is why we're shooting for 100 billion, because what we have in mind is sort of Apple, Samsung, you know, these type of companies. So, you know, you need to compare yourself to the best, and then, you know, shoot for the stars, and then you see where you land. But right now, the market can support a story like this. You know, if I told you the same story 10 years ago, raising money would have been difficult to get the valuations. I agree, like, you know, to get from 1.5 to 5 to 10, you know, that's a difficult game, and probably there was very little money. In Europe right now, we're still struggling to find those funds. Like Europe is late when it comes to those mega rounds. And if you look at what happened in France in the recent past, most unicorns that were created were with money that was either coming from the US or China, not money coming from Europe. So Europe has to figure this out, I guess.
So does that mean that are you fundraising at the moment? Are you trying to raise a new round?
Always be raising, you know. I'm
always raising. Classic CEO or founder response these days. Everyone's always raising.
Yeah, well, everyone is asking you the question every day, etc. So I guess you're always fundraising, and when people want to give you money, your duty as a CEO is to figure out, okay, if I take it, what can I do with it, etc. Because you can always do more, you can always go faster. And so now the question in terms of valuation, I think where the market needs to be careful is not to overprice your company, because what you don't want to do is a down run, or to be forced to sell your company. And so the trick, I think, in the next years, because right now nobody really knows what's going to happen, is just a trend. And you invest now, and we'll see in 2 years, 4 years, 10 years what has really happened. And as an entrepreneur, you need to be careful that your data actually matches your valuation, and that you have a good equity story going forward. Because if you raise too much too high, and then the only way is down and do a downtrend or sell the company, then that's not what you want.
What's it been like raising money in the COVID pandemic? Has it been lots of Zoom calls with investors all around the world? Has it made it easier for you to raise money?
I can tell you my story. So I raised money. So I've got a place in the Alps, in a place called Tignes.
Lovely.
I was skiing from 6 a.m. to 9 a.m. and I was fundraising from 9 a.m. to 9 p.m. Well, that was my life.
Wow.
All in Tignes, all in the Alps, all on Zoom, talking to every investor on the planet. Honestly, it was an experience. And 10T, Dan Tapiro, is the guy that led the C round. So we raised $427 million in the last round. I've never met the guy yet. Like, you know, I have yet to meet him physically. We couldn't travel to the US. He didn't come to Paris. And so I'm looking forward to meet him, actually, in real life.
Is it harder to convince a VC, or maybe Edith, what do you think about this as well? You know, when we're communicating over Zoom, you know, you can't, something's missing, right? You don't have that same rapport as you do in a face-to-face meeting. Are you just as comfortable in investing in a founder that you haven't met in real life?
I think from experience in COVID is you better get comfortable with things that you feel very uncomfortable. That's going to be, I think it will continue to be a norm. And especially now, the way that, as I mentioned, 50% of the fintech Dekacoin are international, not US at all. So if a VC want to actually have access, that's why so many VC are setting up shop in London now.
Yeah.
All of them.
There's a big trend. All the big US names are coming and opening an office.
And
Sequoia and
that's right.
Lightspeed,
Everybody.
Bessemer.
But if you also think about it, right, particularly with fintechs, there's so many regulatory implications. It's very, very tough for any US player to actually come into Europe and want to be number one. It's like a very, very different playground for fintech Dekacoin. But one other thing that I do wanted to point out, particularly, I am a fan of Ledger, although we just met. If you think about when even this over Zoom, it's not just about unicorn sake or naming valuation. It's really about understanding the macro environment. So particularly with crypto, in 2019, the combined trading volume for crypto is about 250 billion. Today, it's over 2 trillion. So this is on a macro level, it's definitely an industry, especially now all the government want to regulate it. It's here to stay.
Yeah, it's not going anywhere.
No.
Do you see a big crypto crash happening at any point, or do you think that the prices of Bitcoin and Ethereum and all the other coins will stay roughly?
Honestly, for the past 7 years that I've been looking at crypto, don't quote me on it. I think every January there's some sort of crash, but then it's just sort of like another day in crypto.
Do any of you have any predictions on how governments will try and regulate cryptocurrencies in the future? China has been quite aggressive in shutting down Bitcoin mines, for example. How concerned are you about that?
Look, regulation depends on how you think about regulation. But first of all, I think Bitcoin recently, and especially with the so-called China bans, have proved very resilient and censorship resistant. Like Bitcoin doesn't seem to care about the China ban, and it seems now that it seems more like China did a mistake and is actually thinking of coming back on some of the mistakes that they did rather than the other way around. And so the trend is not that Bitcoin is going to disappear, because you can't really stop Bitcoin. And whether it's Bitcoin and other forms of cryptocurrencies that look like Bitcoin, I mean, decentralization is the thing that one needs to wrap their head around to understand how this works. But once you understand how this works, actually it's pure mathematics. And I was discussing this with a lawyer in the US, and actually it's protected by the First Amendment of the US Constitution. Like free code is like free speech. And so you don't, in the democratic world, you can't counter free speech. And so everything that's happening online right now, whether it's Bitcoin, whether it's decentralized exchange, whether it's decentralized finance, it's very hard to regulate. And it's always navigating in these sort of gray areas where no one really knows. And if you think about innovation, that's what innovation is. I mean, to a large extent, Facebook and Google are unregulated value propositions today. Like Facebook is still a question of like, what do we do with Facebook again? Like, what is their power? Like, how do you regulate that, etc. And so if it happens, and Facebook is easy to stop. You take Zuckerberg, you put him in jail, and boom, it's done. But nothing happens. And so if you can't regulate Facebook, how do you regulate decentralized finance? It's border impossible, I think. It's a good question, but it's going to be a problem for regulators going forward.
Moving away from crypto, do you think there needs to be regulation on other fintech startups operating in slightly different spaces? There was the big Wirecard scandal. There have been issues with companies like Revolut and N26. Do you think regulators will try and clamp down more on the fintech startups?
Yeah, so I think that at the end of the day, the regulators need to control the money, right? The central bank of every single country needs to control the money, because this is how you control the country. Without controlling the money, you don't control the country. Regulators are there in order to protect consumers, businesses, and the country. And I think that without regulating even crypto or any other form of fintech-related operations, this industry will not be able to scale to the top that it can, because it will be always like a pirate style of a business. And everybody will wait for the regulator to make a decision, and the regulator is not a sucker. They're not going to wait until everybody will move to Bitcoin and then they will say, fine, there is Bitcoin. They will define clear rules, clear guidelines, how things can be done. And this is actually a very good thing for anything in fintech, because then, as an entrepreneur, it's clear you have the boundaries where you can play. And when you have the boundaries, you can do whatever you want inside the specific court, and you can build whatever you want. But if you don't have the boundaries and you're out of bound, then the regulator can shut down your business in a millisecond. And there is a lot of hype around fintech, but people don't see the things that happen behind the scenes, that a lot of times companies, even very big ones, can get shut down by the regulator with a single phone call. And this is something that for anybody that moves money and is in the money movement business, that's the #1 thing that scares you, getting that phone call that can shut down your business. And you can be a Dekacoin, $100 billion company, but still somebody that sits in a regulator office that has a clerk job of 8 to 5 can call you and shut down your business immediately. And it doesn't matter if you raise $1 billion or $1 trillion, it's game over. So the regulation at the end of the day is a good thing, as long as it is done with flexibility that allows companies to actually somehow play inside this field.
What do you think about European fintechs trying to take on China? Is that something that is doable? Are you guys looking at that? It's a huge market, but it feels like Chinese fintechs are very different to European ones.
I mean, right now I can give you the answer for Ledger. It's like China is a dead market to us. Like, there's no way really to enter the market. And right now with the new Chinese policy on, clamping down on technology business, like, you're not even sure you want to go there, because in terms of IP protection and all these good things that you want to protect your business, China is a very toxic place right now, I would say. Especially when it comes to what we do, like sort of hardware, operating system, and the real IP that we have at the core of Ledger. Like, you don't want to put that in a joint venture in China, like, ever. Like, there is a story with ARM that just got ripped of their IP in China. That's a horror story that you don't want to go through. And so outside of China, the world is so big that, why worry about China right now?
Having said that, on a more positive note, even though it seems like everything around China is so kind of scary sometimes, but the reality is, in 2020, during COVID, PayPal actually acquired Chinese companies. So as BlackRock, HSBC, Blackstone, many of them are actually getting licenses and fully operating. Of course, various different finance product. It's not necessarily fintech, and it's not even startup. They actually regular financial product that coming from Europe, coming from the US to go into China. So in some sense, it's a huge market that everybody want to get into, but you definitely need to play by the rule.
And maybe there's room for the European and US fintechs to operate, because China is trying to, tone down some of its own huge tech companies, the Ant Group, Alibaba.
I think that, connecting to what I said 2 minutes ago, China is a great example of how the regulator can shut down an amazing business. You had an invincible company, Alibaba and financials, invincible, going public at $500 billion or whatever it is, and 5 minutes before the IPO, they got a phone call, come back to Beijing. It's not going to happen. This is China. This is communism. Don't forget, right? It's not a capitalist country. And this is a country where, for example, companies like ourselves, we don't need to spend our time there. They have their own thing. You don't want to get in trouble. You don't want to be wasting your time and money. And even if you raise $500 million, spending $100 million in the Chinese market is just like flushing them down the toilet. So I think that what big companies like PayPal and Google and others are doing, their future growth has to come from China, because they're almost maximize their growth in other markets. So they have to play by the rules. They have to get the licenses. They have to make sure that they're local as much as possible. But startups or unicorns, decathlons, whatever, that are not the trillion-dollar companies, we have enough space all over the world. The world is so big outside of China. Even, by the way, outside of the US, the world is huge. So we can scale there.
Pascal, you said earlier you want to be a $100 billion company one day. Do you plan to remain private for as long as possible, or are you open to going public? And I'm interested to know what you think about going public as well, Eric.
I think for me, private, public is sort of a mean to an end. So, if you need to raise money, then at the moment that you raise money, you need to know what's the best option for you. And granted that when you go public, you have to think ahead of, when is the right timing to be public, so you can prepare your company for it, which is a little different from staying private. I think for now, the crypto companies, especially one like Ledger, with huge innovation roadmap going forward, because to be a $100 billion business, we're going to have to change a few things, and we're going to have to take new products to market, which we will do next year and the year after. And that's innovation. And innovation, of course, it's hard to predict. And so if you have a lack of predictability in your business, then you don't want to be public. My previous company, Crypto, was a public company, and we could predict really well the business. So that's when you want to go public. If you want to stay innovative, I would say, stay private as long as possible. So right now, we stay private. If we ever go public, it's 24, 36 months down the road.
Okay. Eric, any plans?
So I think that any CEO of a startup company that will say that his goal in life is to be a CEO of a publicly traded company is lying, right? Nobody really wants to wake up in the morning and be publicly traded as a CEO, but at the end of the day, big liquidity events and the next scale in valuations of the companies needs to come from the mass market, which means you have to go public at a certain stage. I think the change also in the investor mindset in the last 5 years allowed companies like ourselves to keep being private as long as they can, because they have access to massive capital over a time frame that just wasn't possible in the past. Specifically about Rapid, we have a target to go public in between 2.5 years to 3 years down the road, when we hit $100 billion in process volume on a yearly basis, which is probably going to happen like in 2.5 years, and then we'll go public, just in order to basically be able to scale to the next level of valuations above what the private market is able to give us.
Where would you choose to list? I'm guessing New
Only
York.
the United States.
Yeah.
Unfortunately, even though we sit in Europe, if you want to scale a company in the public market, NASDAQ, New York Stock Exchange, that's it.
I agree.
Is that an issue? The fact that the only stock exchange for startups like yourselves to raise decent sums on is in New York?
No. First of all, I like New York. The food is good. The atmosphere is good. And the commute is not that bad before COVID. But I think that the reality is that you see that all the big companies on planet Earth, at the end of the day, they're traded in the US. It doesn't mean that you need to have a US business. I think that the US market matured a lot, because in the past, if you weren't a company with some kind of a business in the US, you wouldn't be able to go public easily. Mm-hmm. I think it changed dramatically over the last several years. They respect more international companies. And it's much easier to basically manage investor expectations and to get access to the pension funds and all the institutional investors through the US stock market.
I can disagree slightly, in the sense that my previous company, we took it at the NASDAQ, so it is not an issue, you can do it. However, for European entrepreneurs, it would be much more comfortable. And back to what I was saying about fundraising, it would be much better if you could fundraise at your doorstep. Because if you're a French company and suddenly you listed in the NASDAQ, and granted you don't need to have like a US business. I mean, fortunately, Ledger has a great US business, and my previous company, we had a great US business, but still as a CEO, and even like your finance team and your institution relationship, like all of this has to be in New York somehow, and it becomes the center of gravity. Mm-hmm. And if the center of gravity for financing is not completely aligned with the center of gravity for business, then it's a bit of a problem. So,
but you have a glass ceiling. You will have a glass ceiling from a valuation perspective. You take your company 100%. Public.
No, I say it's a problem that I agree 100% with you that you have to go to the US. There's no question. End of the story. That's completely true. But it is a problem in a way, because if you could have access to the same kind of capital, it would be easier for European entrepreneurs to do it in Europe.
Edith, I guess, do you tell your portfolio companies to look to the US all the time?
Depends on their location. So for companies that is in China, in Asia, Hong Kong has actually been sort of the #1 go-to place for IPO for Asian companies, mostly because regulatory is sometimes questionable. So in that sense, it really depends on where your market is, where you're located. But yeah, I think for most of the startup founders, US is the destination.
And Is it always a straightforward listing these days when it comes to fintechs, or are fintechs also considering SPACs? What's going on there?
SPAC, direct listing, M&A almost. And I think what's very interesting with Visa trying to acquire Plaid and end up didn't happen, and then double the valuation, good for them. So in that sense, I think the option for going public is so many more now. It's great for founders. And for me, even though sometimes I do complain about the valuation, but being an early stage investor is actually not a bad thing.
And what do you make of Tiger and SoftBank and Coatue and the other kind of big hedge funds moving in on startups?
I think my number one worry sometimes raising so much money, it really changed the psyche of the founder. And I just don't want to see another WeWork situation happen to any of the fintech unicorn founders. Sometimes it's really not about...
You think the valuation goes to their head then and they become more arrogant or more...
I think all founders should focus on and should brag about revenue and profit, not just how much they raise. That's really, at the end of the day, that's the true bottom line that matters.
Good point. I think that's a nice way to wrap things up. We're just about out of time, so thank you very much for listening, everyone, and thank you for being a great panel.